All right, good evening, guys. Ken at Tortoise Capital, nightly trading strategy podcast for September 22nd, 2022. We'll start with the 150, 150-day look back. And we're almost in the bottom 20% of that 150-day look back right now. About 22% off the swing high, off the all-time high, that is. All three of those 10-day periods just suffering all the way down. The 5-day is in the bottom half of the 10-day. And today sold off even further. We're now testing the bottom of this support level over here at the belly of the dragon. And the next support level is only this one here, the 150-day low and the bottom of the RL10. And if that fails at about 362, down she goes. That's about another 4% sell-off from here to here. So that's the size of the buffer that we have in place as this market continues to disappoint. Zooming in on the 30-day look back, so we've got these are all daily charts, so that's 10 days, 20 days, and then 30 days. There's the 30-day high. Today's the 30-day low, just about where it closed at 372. You can see that the 5-day range percentage compared to the 10-day range percentage, this is starting to compress a little bit. This was the big contributor to the 10-day sell-off, that gap down in big break day. But this was not promising at all. This was after a big sell-off day. The longs wanted to see that and try to get back and test the PSAR, but no, it just opened and then sold off, continued. So 370, then 362 are the next targets. Zooming in on the 10-day chart with 30-minute charts. This is the 5-day. That's the 10-day look back. You can see that gap and harsh sell-off we just referred to. And yesterday's Fed day was this. And then today was just to follow through and consolidate around 374, but closing in the bottom of the daily range. So that's not good. So if we get a sell-off here, the last thing that holds it is the statistical RL10. And then again, 368, 362. Look out below. This is the final line in the sand. You can see that's the 150-day low right there at 362. So pretty disappointing. We'll zoom in on the sectors now. All right, so here's our 6 sectors in Tesla today. The S&P was off another 0.84, disappointing. The two best were diamonds and emerging markets at 0.43 and 0.5. Tech was the next weakest at minus 1.23, the Qs. The Russell was the index disappointment at 0.225. Treasuries got murdered again also, down another 2.5. Now it's halfway between 110 to 100 as a support level. So it's driving yields up, but boy, that's faint hope. Tesla was off 4% today, is now underneath 300. Key price level for 300. That was the equivalent of 900 in the old days before the split. So Tesla was a disappointment. We'll look at all the underperformers first. So again, our baseline S&P at 0.84. So we've got lumber, real estate, tech, the FANGs, Mexico, and materials between 0.9 and 1.2 in that cluster. You have biotech at 1.3. Finance, uranium, oil exploration, and lithium. Between 1.68 and 1.7. You have consumer discretionary 2.3. Arc Genomics, commercial real estate 2.8 and 3.6. Now the pain and suffering is really becoming evident today. Clean energy, Arc Innovation 4.1 and 4.3%. Ouch. Marijuana 5%. Now individual companies, NVIDIA and Squarespace 5.3 and 6%. Rivian 5%. Alcoa 4.8. PayPal 3.8. Robinhood 2.7. Devon Energy 2.11. Intel in the chip space. So there's a chip. NVIDIA. Here's a chip. And boy, that just doesn't get much worse than that. Here's Cliffs Natural Resources. So there's a metal at 1.26. Here was Alcoa. And U.S. Steel was the best performer in our metals, but really nothing to write home about. 0.86, 1.26, and -4. So to me, Alcoa is still the berserk trade to be chasing and enjoying. So plenty of pain and suffering all around. Lots of your disruptors and your future of finance kinds of symbols. To the upside, where was there any hope today? Baseline again, the S&P at 0.84, -0.84 I should say. Wheat and precious metals 0.82. The other lumber at 0.53. So here's cut at -0.9. There's wood at 0.53. Energy, consumer staples at 0.14, 0.36. Ethereum -0.1. So here's the cut line between winners and losers today. Agriculture 0.05, still above 20. That's key. VXX 0.27. I would have expected there to be more pain in the VIX, to be honest, with this selling today. Blended commodities 0.28. Oil 0.4. Aussie dollar 0.8. Bitcoin and Ethereum. Now the only the companies, Microsoft was the best company we had today, 0.8. Texas Instruments -0.42. Boy, not a lot to choose from there. Feeling like energy, I think. And defensive plays, but boy, cash sure is king. All right, let's take a look at let's see. Let's look at some sniper trades today. So this is FedEx. It is still reeling from its bad earnings. So this was the close yesterday, and the early morning trade. So here's a Z3 pinch coming into the market opening, which is the big blue line there. So I just take that as the standard risk. That turns out to be $1. This is all on 3 minute. I missed the opening piece. There was a tradable moment there. I did play this one because everything was so weak. I was ready to play the downside. I didn't think FedEx was a winner. I've been ready to play the downside on it. It breaks through the previous low of the day. It's a Z2 to Z3 excursion, so I'm here with the standard risk box. Trades in the usual way. At this point, this is just to show ongoing management. So this was going into lunch. I thought there might be more available in this one, and there was. We ended up exiting somewhere around here. But at this point, when I'm holding about 1.5 R in hand, actually 2 R in hand, right here, and it's stabilizing right around Z minus 2. I go ahead and drop the stop down to here. So I've banked 1.5 on a risk of 1. So just an example of trade management. Check or hold. Here's NVIDIA in the chip space. So they've been in play to the downside also. This is your range compression standard risk box between the Z2s. I just drew that box. That box is about it's about 40 cents, which is kind of the normal R10 for these guys. There's your Z3 breakdown in the morning, so that's like an OR3. Only this is I'm sorry. These are 5s. Yeah, I'm on the 5 minute. So that's your OR5 right there. So there's the breakdown, and I take that size box from the breakdown and just roll it up. So standard risk box. Missed the second entry right there. There was an opportunity here. When I see that shelf, notice that the size of that is approximately the size of that standard risk box. So when that breaks, that's a potential second position. I take the standard exit. There's your PSAR coming down. I just take the standard exit here. That's 1 unit of risk. So that's about 1, 2, 3. So that's plus 3. Standard work. This is Devon Energy. This is the pre-market trade. This is the standard R10. And then I noticed that there had been a range compression, and just as it was starting to open up, I went from Z3 to Z3, and just that all lined up with the standard R10 on it anyway. So for size reference, that's what that looks like. So there's the market opening. Here's a PSAR breakdown. There's your standard risk box. You can see the dragon starting to roll over. The expansion of the Bollinger Band means that is starting to expand volatility. It's becoming more directional, and so that's standard short. Cratered. This is one where I want you to notice it's riding the Z3 line all the way down. So this thing should keep going like that. But it doesn't. It bottoms out and then comes back through Z2. So the peak excursion was here, and it went from Z3 back to Z2. So it retraced this much, which is the same as that wrist box. So that's a 1R give back. So I decide to go ahead and pocket, 1.5. Okay. Also acceptable would have been coming back and getting out at the southern skin of the dragon, which was also the previous Z3 excursion. These are all 5-minute charts, by the way. This one becomes a Kata 2, or I looked at this, and then here's the PSAR flip. Here's that standard wrist box, but this would be my execution stop anyway, because that's where the PSAR would print. So I get the long. There's the standard risk. At this point, this is how I'm managing the trade. Right around lunch, it has not really managed to move. It hasn't moved, but it also hasn't failed. So I look at this little consolidation, and now the dragon is starting to. All I do is just move to the southern skin of the dragon, move the stop from here to here, because I'm noticing we're beginning that Z3 pinch, which means it's either going to break out from this way, that's good for me, or it's going to fail that way, bad for me. So just to get my risk out, all I do is just move from here to just under the skin of the dragon, which is like a 3-bar low. So I've locked in this tiny little fractional gain. That means no lose, plus dinner for 2. Not losing money. It's a science project now. It doesn't matter what it does after that. You can look it up. I don't think there was a lot to make in it. The Russell, to be honest, I was rooting for a downward move on this one, because this would be more volatile in the S&P. Here's like a Z2 to Z2 box, which is about $1.25 on the R10. There's that rising PSAR coming into play. Here's the Z3 breakout. That's the Z2 breakout. That's the Z2 breakdown to the downside. So I'm not offended if you just put a bracket around the Z2 to Z2 and say, you tell me which way you're going to go, and I'll follow you. It breaks down. So now it opens at the big blue line. And here's the OR5 in that blue box. Now, by the argument I just gave you, the break of that PSAR could have been short here, but I was ready to just wait and see for the OR5. It gives me this breakdown here. I take that risk box and then move that up right to here. And now, if I get 10 minutes of movement in my direction, I'm not offended if you just take this and go here and then lock in that gain. Now it's a science project. On the 5-minute, I'm just content to take the PSAR. Exit. 1 unit of risk. 1, 2, plus 2R. Check or hold. Now what we have is about another 30 minutes go by, and it hasn't failed, and you can see that the Bollinger Bands have pinched. So here's the Z3 lines have come into here. So I take that standard risk, and then I just, there's the price. I just say, look, there's the PSAR breakout to the upside. There's the PSAR break to the down, or the risk box break to the downside. And this ended up going down some more later in the day. So that's 2R in hand and a trade frame going forward with patience. Check or hold. Now finally Tesla. So Tesla's been in play. Yesterday it cracked and threatened to break below 300. So 300 looked to me like an important psychological level. Here's the OR3 at the open. I'm sorry, the OR5. And this has about $1.50 in the R10. So it breaks south of the OR5, standard risk box. By this time in the trade, you're about 20 minutes in. I'm not offended if you just drop this right to here, and then take your no lose plus dinner for two. I'm heartened by the fact that we're getting a series of lower lows, and the highs are starting to get lower highs. So now it almost feels like it's that kind of a channel. Like as long as it would stay in that channel, I'd never get out of it. Until we get a second entry. So this feels like a shelf that broke. I suppose that could have been. I didn't have 2R in hand at the time, though. But by this time, I've got 1, 2, 3R in hand, and it just broke a shelf, and the market is failing, so why not? So I'm +3, and I put that second position on. Gives me the standard exit. Was hoping for more out of it, to be honest. But this one pays off that extra little, about 1 extra R for that. And this one gives us 1, 2, 3, 4. So 4 and 1, that's about 5R in Tesla. I think that's what we did with that one. Oh, that was a stop and reverse. Yeah, I went with the stop and reverse on 1 because the retracement to the PSAR was 1 risk box, and by force of habit, so a fraction, you gain that little fraction in there, and then it didn't break, and it didn't break. So I just took that same standard risk box, $1.50, and there's my price, which is just stabilizing right in the middle. So I'm ready to go long here or short there, and then use the risk box as the unit of measure. Check or hold. That's kind of standard work. let's look at. We'll go to the daily report. Dashboard 1. And we remain in bearish normal. Oh. And let's see. So today's little sell-off made it unanimous. The market is getting crushed. Still in risk off by the risk Z. We're back into red bearish here on the long-term trend price relative to the 200. The bearish move at ADX is slowly getting stronger at 22. The risk Z is rolling over, getting ready to collapse. 4 out of the 5 min pains, Johnson & Johnson, Merck, United Health, Procter & Gamble, all in the healthcare and pharmaceuticals, plus Walmart, plus Brazil. Max Pains, Alcoa, Boeing, Nike, Disney, American Express. Metals and mining, oil exploration. Dow Tactical. This one will get your attention. All of these multiple collapses over 10-day, 1 month, 3 month, and 6 months. So Alcoa collapsing, Disney, DuPont, sorry about that. Intel, shredded. Nike, Visa, and Walgreens. Never a surprise when Walgreens making new lows. So just kidding. It's the opposite of the trend of those healthcares and pharmaceuticals. Don't know how much more pain they can take. ETF Tactical. A ton of auto framers. Everything getting slaughtered here. Even treasuries. Man. Materials. Let's see. Brazil, Latin America, and Japan were the only green lights today. Autoframer shows this is a buyer's market, but I would, again, be starting with this chart from the top down because these are the ones that have failed the most from their 10-day highs. So Cisco, Real Estate, Home Depot, the S&P getting slaughtered. Dow, 3M, Intel and Cliff, U.S. Steel. Plenty to choose from there for standard tradables. On the squeezes, some interesting names for us there. 3M, Home Depot, Cisco, Intel, SPY, Coke, and Diamonds. I like that. Brazil was a big directional move today. Sniper time with Godzilla in the house. You will recall 2 weeks ago there were almost no Godzilla symbols whatsoever on the S&P 500 and none in the tactical symbol set. So things have really started to get bad. MCO, CZR, and CHTR, PEN, and X-ray, and COF just started getting volatile today after a period of quietude. But it's a buyer's market on this one. IP International paper remains a good one. In the tactical symbol set, ouch, the Dow, tech, emerging markets, Intel, you got to pound that one. Cliff and Microsoft. When my favorite symbols are in that stack, that's the kind of trader I am tomorrow. A few fence sitters with Tesla and Schlumberger and Twitter. Just two popcorns in the quietude. GIS, to be honest, is more like a volatile because it's green and almost green. The most volatile to me, or the most interesting, I'm looking for things that are green and green, especially. But I would also take a look at green and red because you have extreme volatility large and then small volatility, indicating maybe the run is done and it's starting to stabilize. So plenty to choose from there. Let me go back. The two that that are on that chart that I will especially pay attention to because I've been trading them: International Paper and also Ford. Ford's at the 30 at 0.3 on the long term, but the 30-day and the 10-day have just been smoked. But it did stabilize a little bit today, so that is hopeful. International Paper's been a Godzilla. You can see that 0.01, 0.02, 0.03, and a very volatile 5-day, but just average 1 day. So that pain and suffering might be over. But if it's not over, you know what to do. Get short on when it breaks below the previous day's low. That's a no-brainer. Sniper stats for the tactical symbol set and the auto framer. Again, you can see the winter dominating on both the Dow, the large caps, and the ETFs. And then the tactical symbol set sorted by the 5-day. No extreme 5-day moves, but some 1-day moves starting to creep in. Brazil, that's enough to make it a focus. Simon Property Group in the green. Clean Energy is getting smoked. Robinhood getting smoked on the 10-day. Big move today in Robinhood down. The multi-time frame NDX, you can almost feel the heat coming off of that. I would just notice that the two that are not in maximum pain and suffering are in that healthcare, Merck and Johnson & Johnson. I would note also that Brazil is standing out for its resilience, and Latin America too by extension. Other than that, not much. All right, that's that. Let's take a look at the traders today. Had some good work from them. Constantine still doing very well with his prop trading firm. Really glad to see that. Here's the dollar yen 3-minute pair. Dollar yen on the 3 minutes. He sees sell off like a 50% retracement, and now it rolls over with a tight risk box and a collapsing dragon, so he pounds that. It comes down and holds support right where you would expect. So he takes the PSAR flip and banks a nice job. I'm not sure what that is, but that's about 1, 2, 3, 3.5. Pretty nice. His favorite gold dollar on the threes. Pre-market big run up, 50% retracement, stabilizes, double bottom, PSAR flip breakout, tight risk. That's his tight risk box there. And exit, that's probably exit 1 and exit 2, and that's going to be about 1, 2, 3, 4, 5, 6. So that's in the neighborhood of 6R. What happens with no overnight risk? Well, this is when you are concentrating on making bricks, what you get is this. Oops. We'll take a look at his histogram first. Very nice controlled left side. This is from 0 to 0.5, between 0.5 and 1. And then this is out to 2. So you have a nice smooth looking curve, but which is all of the larger R losses just get smushed over into between the 0 and the 1. So strictly nothing worse than 0.1. And then a normal distribution out to here. And then fat right tails, which make all the difference. I guess I inadvertently closed his other, wanted to show his performance stats. These are not too shabby. So 0.67 win rate, 57 winners, 28 losers. So he's winning 2 to 1. His average R multiples 1.5. Average winner performance, we're going to look average winners to average losers. Average winner 0.39, average loser 0.07. That's 5 to 1. Almost 6 to 1, if we're, so that's about 5.5 to 1. So when you take a 2 to 1 win rate and then a payoff of 5 to 1 and use that to smooth, that's a 10 to 1 relationship right there. That'll help you sleep at night. His return on equity over these 90 trades has been 20%. Max drawdown, 0.25%. Profit factor, 12 to 1. Sortino ratio, 4.8 to 1. Sharp ratio, 0.4. SQN, 6.3. Gain to pain, 10 to 1. That's what you do. He's trading a prop firm's money on the basis of his training performance with him, and then they gave him a chunk of change to manage. That's his percent gains, essentially the equity curve. Let me get that cleaned up. There's his equity curve. I think those two are his largest drawdowns. No, there's one right there. And I suppose from here to here. Yeah. Here's so just shout out to Constantine. Just keep going, man. You are inspirational. Like what you're doing. Tim gets started here. Sees that first leg up has stabilized and starting to move up, so he buys it. It rolls over. He's not feeling it. Take a quick scratch. There was a potential for a breakout, but he noticed that it was a quick rollover, so he doesn't play that. Now we get the PSAR flip. He waits to see it bottom, roll, and start to fail again, so he takes that short. One standard risk. It's just not following through. It's supposed to work right away. It didn't. I don't mind that he takes that one. We could also trust the PSAR and maybe have ridden that down to here, but that's all right. He's off desk anyway. So that was either fish or cut bait time. You're either going to work right away or he's got to go do some work. Coming back, he sees it bottom. There's leg one, leg two. He buys. Quick loss, but again, quick loss, stop and reverse on two positions, and then the big deal of the day coming in with basically 3R. They all look the same leaving the station, but I want you to notice that it's after the big moves that you get big moves, which get big moves. So volatility begets volatility. And I think the tell was right here. When this previous peak breaks here, that's when you get that move. When that one breaks, when that resistance level breaks. And notice what happens when you carry that across. When that price breaks on this side, you get another immense move downward. So there may have been a second position available in there with the 2R battle drill. So just something to look at. Here's my brother. Here's 11R on Brazil. So this has been the anomaly to the upside among the indexes we saw earlier in the report, and today was no exception. So he was doing his live trading room today, and he was teaching the sniper class. He gets two quick entries in here, I think. I'm sorry. So he was trading that with small size. Then he's going regular, so he gets this one. 2R battle drill, second, third positions. It rolls over, he exits. Here's the PSAR flip. Adding it a 2R battle drill, adding it a 2R battle drill, starts to roll over, puts them all in the money. 11R total. Just crushing Brazil. 3 minutes. Standard R is 10 cents on that one. Is the R10. What makes it big or small is the statistics, not what you think it means. 10 cents in Brazil is a standard R10. If that was utilities, it'd be like 3 cents. You say, well, God, 3 cents. Yeah, but that's what the numbers show. This is less with the Kiwi. Gets one short. Exits, stop and reverse long. Short, quick scratch, gets paid, quick scratch, 0.9. We need to get more on this. Oh, I see. That's where he was getting it on review. That's the one where even if you start here, you say, oh, it's already made its move. Sure, it's all done. Oops, no, it's not. You got to take the signals. But still, that's good work today. Devon and Tesla. Woj. Oh, there's the open. Gets paid. Where is my second entry, buddy? And where's my PSAR flip? So we only get two. Devon, 1R loss, 1R gain, and there just wasn't much else in that today. energy in the holding pattern. So 2R out of that one. Left a lot on the table on this one, yeah. But still, it came in with 0.8. So that's a good shot. This one here should be here. Then you don't lose money on that one. And then this one, you were that much in the gain, and then it rolled over. Yeah, should be a scratch. But you do get paid. That's reasonable. And now here. You're supposed to tell me when there's a meeting, dude. God, they ought to be paying you good for those meetings. So that's 0.8. So that's about 3R today from Wood. So really nice work on that. 8 for the day for him. All right, that's everything we got for today. My brother's putting together a special master class on the 2R battle drill. So it's not just how to preserve the gains on it as the trade is approaching 2R at known resistance, but it's also how to use that 2R function as a way to automate your re-entries or your additional position thought process, so you can reduce your cognitive complexity to just battle drill. We don't want to be thinking all that much.
Right.
So he's putting that together for us. Subscribers will get first bite at that. All right, fellas, good work today, and we shall see you tomorrow.